Well, Doc, it's great to catch up again today.
Yes. G'day, Lou. It's we've got the holidays behind us, more or less. I think there's still a few out there enjoying school holidays, but we've pushed the big holidays, the Easter holidays, which affects everybody, behind us, and we've got, of course, some interesting news because we had the resumption of our weekend auction markets last Saturday, and gee whiz, did we have some strong results. And even though the market's not fully engaged or re-engaged yet, because as I said before, there's still school holidays, it was a very strong result. And, rather than showing any signs of easing, markets look to be, can we believe it, increasing in their energy. The rest of the autumn selling season certainly has some very positive prospects in store for it. But as we mentioned last week, and we'll get into the show pretty quickly today, Lou, we were going to discuss what the latest data on the economy is showing us. Of course, that's what we do every week. But we had some very important data last week, and that was the jobless market, the unemployment numbers, the labour market numbers for March. And typically that the labour market data is the first lot of the monthly data from the ABS that comes out. So it gives us the first hint of that particular month's performance. So I know I can tell you're very excited, Lou. So shall we get into it and have a look at our results?
Well, I think we should, but I also think that I need to at least say to people, that you probably have more letters after your name than the alphabet. You're quite an experienced chief economist. I mean, I suppose your background and your knowledge and all the studies that you've done put you in very good stead of being someone who's really an expert, I could say, in the market and counting those numbers, which is probably the most important out of it all. But you could tell us a bit more.
Yeah, thanks, Lou, for that. I think it's important perhaps at least to have some formal qualifications if you're speaking about any particular discipline. And I think also, obviously, when you're speaking about the housing market, we're not talking about small items here. It's the biggest decision just about anybody makes is to purchase a home or sell their home and be engaged in the housing market. So I think it's important that you have credible information in regard to those decisions that you do make, which are very important decisions. We get a lot of noise, can I call it that, about the housing market through the media, and it's not hard to get, your name up there in lights if you're prepared to say something quite outrageous, and because it draws attention. Because of course we're also connected to housing markets and what their prospects are. But the interesting thing again about the current cycle as it's emerging, Lou, is that it's a rebounding market, and yet this is coming off the back with yet another series of doom and gloom house price crash forecasts, and it's not just from those that are seeking a quick headline. It's, from other sources such as banks, which is quite remarkable just how wrong the banks tend to be in respect of their housing market forecasts. But again, it is not just those, those seeking a cheap headline, that are now retreating from their forecasts, but it's others that perhaps should know a little bit better. But what you should really have learnt from was the rebounding Australian housing markets of the last 4 or 5 years, when we have had significant negative comments and, forecasts of house price crashes, which just haven't eventuated. In fact, we've gone in the opposite direction. And with house prices, rising rather than falling. And again, we're in that same energy, Lou, and, it's not rocket science, to be quite honest, and it's nice to have a lot of letters after your name, I guess. It gives you some imprimatur, but It is just the old law of supply and demand, and Australia's problem is we just don't have enough houses. In fact, I think in the Sydney market we've basically run out of houses, and that's not good news if you're not a homeowner. And this is the issue, is that we're now continuing to see an acceleration of house prices and rents, and I think that's likely to continue. But it's all being driven by the fundamentals, and if we keep looking at the fundamentals, Lou, I don't think we really go wrong, So let's have a look at that data from last week, shall we? It is, again, very interesting. So my housing market's latest data, and we'll look at the ABS data to start with. And it's the unemployment data or the labour market data from the ABS. And as I said before, Lou, it is the first lot of data that we get for the month. So it sets the scene, I guess, with the big picture. And we've had just another stunning result for March. Just absolutely no sign of a slowdown. In fact, if anything, the labour market's strengthening. And you just really beggars the question, Lou, why did the RBA pause the rate? Now, I'm not saying that rate pause wasn't welcomed by particularly those with mortgages, given that we'd had 10 consecutive increases in interest rates, which was unprecedented. But the whole point is to the Reserve Bank's narrative is that, well, we've got this terrible inflation problem, which is a little better, but I emphasise the word little there in terms of a little better. But they've decided, okay, well, let's have a little bit of a pause to see what's happening. Well, and they're continually telling us they're going to look at the data in terms of their decision making. But with the latest labour market data, as we'll look at shortly, Lou, absolutely no justification for the strength or for, the strength of the Australian economy may be easing because of those previous interest rate increases. No sign at all. So, I mean, we'll talk about this again later in terms of what it means for the next meeting of the Reserve Bank, which is just in a couple of weeks' time, whether they decide to go back to increasing rates. And it'll be another one of those, if they do, those famous Reserve Bank flip-flops, So, but with the data that came out for March just last week, we saw again the unemployment rate maintaining its level at 3.5%. This is just a crazy number, Lou, 3.5% unemployment rate. We really have to go back to the early 70s to have an unemployment rate that low. You can see how that 3.5% situates itself against recent history. It's well below even, the period we had leading up with that previous boom from higher interest rates through 2008. When we see how unemployment peaked at just over 7% there during the pandemic, that we've halved that, more than halved that, and we're well below where we were pre the pandemic, Lou. So this is just a crazy strong economy. As I mentioned before, we have to go back to the early 1970s to have an unemployment rate at this level in the mid-threes. And those unemployment rates were based on a quarterly survey, a 3-month survey, whereas these unemployment rates are based on a 1-month survey. So it's a different, we're measuring different, using a different methodology to measure unemployment.
Yeah.
But if you remember back to the 1970s, Lou, I'm not sure if you can, but if you do.
I can. I started work, my first job in 1973. So, yes, of course I can remember.
Well, it was a different time then. And, of course, the big difference was that basically we were measuring single income households, mostly it was all about the male breadwinner. And that meant that, we certainly had a lower proportion of those in the population participating in the workforce. And, of course, now we have a completely different social construct in our labour markets. We have certainly many more out of the household participating in the labour market because they have to basically to keep up with the cost of living. But nonetheless, it's a different time, and that unemployment rate, if anything, reflects an even stronger economy than we had back in the early 70s, when we really only had to look after one breadwinner in each household. So now we have to provide more work, and we're doing it at the lowest rate since those heady days. So 3.5% unemployment rate, Lou. So that was steady. And when we look at the state performances, every state except Western Australia has seen a decline in the unemployment rate over the past year. And the West Australia still is very low, so it's not exactly, not good news. It's just floating around that 3.5%. But I think the interesting result there, when we look at the states, is that 3.2% unemployment rate for New South Wales, which continues to lead the charge. And this is a factor clearly that's driving the Sydney housing market, is that the New South Wales, the Sydney economy is the strongest in the country. And of course, we can see that with New South Wales clearly having the lowest unemployment rate over March compared to the other states, and having had quite a significant drop, a bigger drop really, with the exception of South Australia, over the past year. But I think that's part of the key to why we're still seeing robust housing market activity, is that it's such a strong labour market. And if we look at the back, the numbers here are just really stunning for a number of reasons. Firstly, obviously, they're all positive. We saw as we've discussed, the unemployment rate steady at 3.5%. That is still a record low monthly number. Jobs are booming. We actually, and this is quite remarkable, Lou, we created another 53,000 jobs over March, and that followed a creation of over 60,000 jobs in February. So we're still creating new jobs, Lou, and keeping the unemployment rate at a record low. Now, the number of people out of work, the number of unemployed fell again. It was down marginally by 1,600 over the month. But that followed the February data, which we saw quite a steep fall in the number of unemployed. So we've got more new jobs and fewer unemployed. So more employed and fewer unemployed. And the point is, it's coming from a still very high proportion of our population that are engaged in work. That participation rate measures the proportion of the population that is in work. It's at that near record high of 66.7% again. So we're still, dragging people out of our population who are attracted by, good job opportunities. Those that maybe have retired or are self-employed are coming back into the workforce, attracted by all those job opportunities. And as we saw before, all the states are reporting low levels of unemployment rates, and with the exception of Western Australia, are well below where they were a year ago. So, I mean, it really sort of asks the question, why did the Reserve Bank pause rates? There is absolutely no sign of an easing in our economy, which would ease demand and put downward pressure on inflation. And the Reserve Bank has kept telling us that's what it's looking for, particularly labour market activity. This is unequivocally strong data, Lou. There are no ifs or buts or maybes or trends or whatever that any doomsayer can look at and say this is showing interest rates are crunching the economy. So the Reserve Bank would be scratching their head on this one. Do they wait longer? Do they keep the pause going until they start to see a sign? Or do they admit that, well, no, we need more rate rises because it's done nothing so far? And the rate pause they had over April may actually turn out to be premature, that they needed to keep going to reach their goals. We're going to get the official inflation data out next week, Lou. And that's for the March quarter, and that'll be, again, I'm not sure how important that'll be because it'll be very backward looking. As I said, it's going to be interesting to see how the Reserve Bank reads this one. But one would suggest that if the other data coming through in the next couple of weeks, retail sales particularly, is still strong, that, maybe they're going to have to think or rethink their strategy. But absolutely no doubt that the decision by the Reserve Bank to pause interest rates over April is a positive for the housing markets. It's relief for mortgage holders. I think it's already shown itself up in the data for the auction results from last weekend. But the real question is, has it done anything to justify the Reserve Bank's policy position? So anyway, that's a fertile discussion down the track, Lou, which I'm sure we'll enjoy. So pause, I think, is, as I mentioned, a positive for housing markets. It'll bolster markets that are already reviving, adding to that growing buyer and seller confidence. And it is all about those value opportunities emerging, particularly in Sydney and Melbourne, Lou, where prices are still below where they were a year ago, even though they're rising. So the question will be for buyers, well, if I wait any longer, I'm going to lose that annual discount that I can still get now notionally on properties. And that just create that fear of missing out energy, which we saw drive housing markets strongly around 18 months ago. So what we've, Lou, is a bit of an exclusive. I've run the mid-month April home price data. So yes, we are in the middle of April. Yes, the month hasn't finished, but we have run the data just to give an indication of how we're going so far. So it's not the final data, Lou. It's just up to the middle of the month, and we are smack dab in the middle of the month. So it's an appropriate time to do that. And I think we did it last month anyway. So I think our viewers will be interested to get some early results in terms of how our housing markets are tracking up to the middle of the month. Of course, things will change. They won't change that much, and it's all about the trends anyway. So no surprise, another rise, Lou, in the national house price over April. You can see that's now the third consecutive rise in the national house price. We shouldn't be surprised that it's the trend's continuing because we've seen those stronger auction clearance rates. We only really had the 1 week end until we closed down for Easter. But nonetheless, and of course, this is quarterly house price data, so it's a good, reliable measure. So it's taking a 3-month snapshot up until April, to the middle of April. But you can see how consistent the trend is, which reflects just how solid the data is. But yes, after that lengthy period declines from May last year, we're now back in the black in terms of increasing. But as you can see, we're still not back to where we were a year ago, Lou. So again, that's sort of reinforcing those value opportunities. So the positive news there is that another prospective increase in the national house price over April.
Amazing.
And when we look at the numbers, and we've just got the major capitals here, Lou, we'll have the smaller capitals when we have our final report in 2 weeks' time. But you can see there that all the major capitals have recorded an increase in house prices so far over April. Sydney up again 1.1%, Melbourne up 0.8%, Brisbane up 1.3%, and Adelaide up 1.5%, Perth up 1%. When we look back, as I mentioned, we're still lower in Sydney, Melbourne and Brisbane than we were a year ago. But that gap is closing quickly, Lou, particularly as we can see those house price increases continuing. And the trend is clearly there as well. And they're the 2-year results there. And you can see that the Brisbane and Adelaide market are still well ahead of where they were 2 years ago. So for house prices, another positive month in prospect with our mid-month report. And when we look at unit prices, same story, Lou. No difference between what's happening in the unit market and what's happening in for houses. Another increase. Again, that's the third consecutive increase in the national unit price and very similar trend to what we saw for houses, still below where it was a year ago, but certainly there's a clear turning of the market evident with that data. And when we look at the results, so Sydney up just 0.2% over April so far. Melbourne a strong 1.6% increase over the April quarter compared to the March quarter. Brisbane up 1.1%, Adelaide up 1.2%, and Perth just up a little bit by 0.1%. Still lower over the year in Sydney and Melbourne, again re-emphasising those value opportunities, but not quite as low as house prices, particularly in Sydney, and I think that's helping to drive the affordability advantage that units have in Sydney over houses. And again, when we look at the 2-year performance, Brisbane and Adelaide well ahead of the rest in terms of their growth over the past 2 years for unit prices. So there's a sneak preview, Lou, for our mid-month housing market report. Just a quickie there, and we'll go into more depth in a couple of weeks when we get the final data. Nothing changing. It's all good, and of course the impetus is being accentuated by that rate pause, which can only make those that were worried about higher rates, and I'm not sure there were too many of them because housing markets have been rising, but those who were would have felt pretty good about not having a rise over April.
Yeah. So if you're sitting on the fence thinking about getting in the market, the data states that you should be jumping in.
Well, if you're waiting for the bottom of the market, you've missed out in Sydney and Melbourne particularly, because those markets bottomed out in February. So prices are rising and it creates its own momentum. Lou, those that were sitting on the fence are now, all about, well, hey, have we missed out? We better get in while prices are still lower than where they were a year ago. And that, as I said, creates its own momentum. And I'm sure that we'll have quite a robust finish to the autumn selling season. And the second part of the autumn selling season, of course, has commenced now. That typically runs up to the Queen's birthday long weekend, but it's not the Queen's. Is it the King's birthday long weekend that we have now in June? And it's only really a couple of states that have that weekend now. So, but you know what I mean? It runs up until typically the first or second week in June, and then we enter the winter market. So I think there'll be many that are keen to get their maybe postponed buying and selling season decisions done and dusted before the autumn selling season finishes.
True, very true.
So we have our, as I've alluded to already, just to finish off, we have our latest weekend auction market results. Of course, last weekend or the weekend before was Easter, so we had just a handful of auctions over Easter, so we didn't have any results. And the results that we had really weren't telling us what was happening in the market. So this was the market returning after the holiday break. Now, it hasn't returned in full force because we still have school holidays happening out there, Lou. And typically that means that the mix of properties in our auction markets tend to favour more lower-priced, mid-price ranges. Higher price ranges tend to have more of a, capacity to not worry about buying and selling property while they're on school holidays, and that's what we typically see. But nonetheless, when we look at the numbers, and we've just discussed the outlook, but when we look at the numbers for, and we know that auction clearance rates are a positive indicator of house price activity, as you can see there, comparing clearance rates in Sydney with prices. Our clearance rates have risen, and guess what? Prices have risen. And the same story in Melbourne, as clearance rates have risen, so prices have risen as well. And here's the results, hot off the press, Lou, for last Saturday's return of the market. Look at that Sydney result, 78.7%. Who could believe that? After, having finished the year below 60%, we're now pushing towards 80% just 3 months later. Reasonable numbers of auctions, over 600 auctions in Sydney. As I said, the market's not fully engaged, but that's around about the numbers that we've been tracking this year. So still a good test for the market, and we'll see more auctions coming through, I would suggest, over coming weekends. But 78% result, Lou, Highest result in a year for the Sydney housing market. That is prior to the interest rate increases last year that began in May. So this is a very strong market emerging in Sydney. Melbourne, again, mid 70% clearance rate. Again, the highest result for a year in Melbourne. Numbers, again, down still because of school holidays, but still a good measure of a good test for the market. Brisbane also above 70% on the weekend, and Adelaide resuming its mantle or continuing with its mantle as the strongest auction market in the country with a plus 80% result. And Canberra a little better too, but still the underperformer there, the Canberra housing market. A few local reasons, as we've discussed, but we'll go into that into some depth when we do the end of the month full housing market report, Lou, and we can discuss each of the individual markets' performances. But hey, really, you couldn't be disappointed if you're a seller with those sort of clearance rates, Lou. They sort of telling you the chances you have of selling your property generally at auction on the weekend. And when you're getting nearly an 8 out of 10 chance of selling your property, it only means that there are way more buyers than sellers, and that means upward pressure on prices. And we're clearly seeing that as those mid-month reports reveal us and reveal. So we'll just finish off by looking at the monthly results. You can see there that so far over April, that Sydney's above 75% clearance rate, which is now higher than where it was clearly higher than where it was over April last year. Similarly in Melbourne, tracking higher than April last year. Brisbane around about where it was a year ago in terms of its monthly clearance rate. Adelaide, similarly, just about where it was a year ago. And the underperformer remains that Canberra market, as we've discussed, which, although improving a little bit over April so far compared to March, is still well below where it was a year ago. Typically, the Canberra market follows the Sydney market upwards and downwards. So, we look to see Canberra picking up off that positive Sydney energy. But there are some local factors, I think, there, particularly in terms of local policies for property in the Canberra market that may be just starting to have an impact on activity in that market. But as I said, we'll discuss that in some depth going forward. And of course, you can get those auction clearance rate numbers every Saturday night. It's available on my LinkedIn account, Doc Andrew Wilson, and that's for the Capital City Snapshot. And you can get the full regional reports for Sydney and Melbourne Sunday mornings in my regional report. So that's me for this week, Lou.
Perfect. Well, the facts are the facts, Doc, aren't they?
Well, it's a lot of interesting information, of course, particularly that unemployment data, which just, there's just absolutely no sign that this economy is slowing down. It is a booming economy. The negative to all of this is, of course, that will it continue to encourage spending, which will put upward pressure on inflation. And, of course, the role for the Reserve Bank is to get inflation down. So, it'll be very interesting to see what happens going forward. But we certainly have plenty of positivity, plenty of confidence in our housing markets at the moment. And why should we be surprised when there's clearly still a lot of value in those markets, given the prices are still lower than where they were a year ago? But no doubt that particularly the Sydney and Melbourne market have bottomed and are now starting to head towards regaining those record high price levels that they had a year ago.
Fantastic, as always.
So we'll look forward to next weekend or next week, following what will particularly be interesting results again for our weekend auction markets, and because we'll have more of a fully engaged market as school holidays start to finish. But there's really no sign, there's no prospects of really any sort of negative connotation in our housing markets at the moment. It's we're really now just working towards the midwinter break, but it's been so far a very positive autumn selling season, Lou. But there's certainly some, head scratching will be going on, particularly at the Reserve Bank in terms of what they do next.
Oh, well, whatever they do, we'll probably work through it. And I always say to people, if you're secure in your job, the banks will give you the money. Why wouldn't you jump in?
And that's the key to everything, Lou, is how strong the economy is. And our economy is still strong. Now, it's a double-edged sword because the stronger the economy is, the more likely we are to get inflation, and that'll mean higher interest rates. But the Reserve Bank has clearly shown that it's not on a blinkered course, higher rates, that it's prepared to wait and see. And that's what it's doing now. And it may wait and see next month as well.
Yeah. Well, we'll see what happens. We'll keep an eye on it and we'll be back on together.
Well, good to talk, Lou. And I look forward to our next chat next week.
Thank you. Very insightful information. Well worth it. And you can certainly make some decisions on the back of your facts you presented.
Thanks, Lou.
Thank you.